Today, we are diving deep into the one massive question that's hanging over, well, pretty much the entire tech world. It's a question that's being fueled by trillions of dollars and a level of ambition that is frankly hard to believe.
You've heard it, I've heard it, everyone's asking it. Are we in an AI bubble? I mean, you see the headlines, you hear the hype, but what's really going on here? Is this a rational, once-in-a-generation investment? Or are we just watching a replay of some of the most expensive mistakes in history? Okay, let's get into the data. So to really get a handle on the scale of this, let's start with a baseline. Right now, today, all the data centers in the US are worth about $1 trillion. That's the entire existing infrastructure that powers our digital lives. A huge number for sure. But honestly, it's nothing compared to what's coming next. Get this, the plan is to spend another $3 to $4 trillion in just the next 5 years. So we're talking about building 3 to 4 times the entire existing infrastructure from scratch. In fact, just to put it into perspective, more money has been poured into data centers in the last 3 years than the entire inflation-adjusted cost of the U.S. interstate highway system. And that project took 4 decades to finish. When you see numbers like that, it's no wonder people are screaming, "Bubble!" And of course, that kind of spending spree makes everyone think of the most famous tech flameout of all time, the dot-com bust. But is this really the same thing all over again? Well, the source material we're looking at today makes a pretty compelling case that, actually, it's fundamentally different. Okay, this slide right here is the heart of the argument. Let's break it down. Back in 2000, the big bubble asset was something called dark fiber, basically billions of dollars of fiber optic cables that were laid in the ground but were never actually used or lit up. At the peak, an incredible 97% of it was just sitting there, dark. Now compare that to today's defining asset, the GPU, the chip that powers AI. Its utilization rate? It's basically 100%. They're running 24/7. And then look at the valuations. Cisco, the superstar of the dot-com era, was trading at a wild 180 times its earnings. Nvidia today? It's closer to 40. Big difference. And that really brings us to this one perfect quote. There are no dark GPUs. It just says it all, doesn't it? Unlike the speculative build it and they will come vibe of 2000, the AI infrastructure getting built today is being used the second it comes online. The demand is absolutely real. All right, so if the demand is real and the hardware is being used, who on earth is writing these multi-trillion-dollar checks? You know, following the money is always the key to figuring out if something is sustainable. Well, here's the thing. This isn't being funded by a bunch of startups burning through venture capital. The ones spending the big bucks are the most profitable, cash-rich companies in the history of the planet. We're talking about giants who, together, are generating something like $300 billion in free cash flow every single year. And they're sitting on about $500 billion in cash. So for them, this isn't some speculative bet. No, they see this as an existential arms race they absolutely cannot afford to lose. Now, this has raised some eyebrows and brought up a term with a pretty shady past, round-tripping. It's basically when a big company, let's say a chip maker like Nvidia, invests a bunch of money into a startup, and then that startup immediately turns around and uses that exact money to buy chips from Nvidia. It looks a little circular, right? But the argument here is that these concerns are pretty overblown. This isn't just some clever accounting trick. It's a cold, rational, and strategic move in a massive war for the future of computing. Think about it. Nvidia's biggest rival isn't some small chip startup. It's Google, with its own custom TPU chips. So if Google is funding AI companies to get them locked into its hardware, it makes perfect sense for Nvidia to do the exact same thing to defend its market share. It's a platform war. Okay, so to really understand what's being built, it's super helpful to think about this new AI economy in 3 distinct layers. Let's map it out real quick. It all starts at the bottom with layer 1, the chips. This is the bedrock. It's the physical hardware, the silicon that makes everything else possible. We're talking about those super specialized processors, Nvidia's GPUs, Google's TPUs. This is the foundation of the whole thing. Now, sitting on top of all that hardware, you have layer 2, the models. This is the intelligence layer. This is where companies like OpenAI, Google, and Anthropic use all that raw computing power from layer 1 to build the massive frontier AI models. You can think of these as the brains of the operation. And then finally, at the very top, we have layer 3, the applications. This is the part that we all actually see and touch. It's the software, the tools for work,
the apps on our phones that take all that intelligence from layer 2 and turn it into something useful for us. This is where the magic actually happens for the end user.
So you have these 3 layers. What does that actually mean for how business gets done? Well, the biggest change is happening right at that top application layer, where AI is basically poised to completely rewrite the rulebook for software.
And this chart illustrates that shift perfectly. So traditional software as a service or SaaS companies, they're famous for these amazing gross margins, right? Often around 85%. But AI applications are way more expensive to run. Every single time you ask it a question, it costs real money in computing power. So their margins are naturally lower, maybe closer to 60%. And that has made a lot of investors really nervous. But here's the wild, counterintuitive twist. In the AI world, lower margins aren't a sign of failure. In fact, they're a mark of success. It's proof positive that your customers are actually using the powerful, expensive AI features you built. You know, we've seen this before. When the world shifted to the cloud, margins also went down. But that shift unlocked trillions of dollars in value. This is the same kind of transition, just happening even faster. So where does this all end up? In a world that's less about tools and more about outcomes. Picture this. Instead of going to a dozen websites, you just tell your personal AI agent, hey, plan my vacation to Italy. It already knows what you like, what your budget is, and then it goes out and actually negotiates with the airlines and hotels directly to get you the absolute best deal. You're not buying a search tool. You're buying the perfect trip. You're buying the result. All of this investment, all of it, the chips, the models, this incredible digital brain we're building, it's all pointing in one ultimate direction, giving that intelligence a physical body. That's right, robotics. This is the end game. The goal isn't just smarter chatbots. It's to create intelligent humanoid robots that can see, understand, and interact with the physical world. Instead of programming them line by line, they'll learn just by watching a YouTube video or by having you show them how to do something. This is where the virtual world meets the physical, and it is already becoming the next great battleground between companies like Tesla and a whole wave of competitors out of China. So you have to ask, how fast is all of this coming? Well, this quote right here just stops you in your tracks. Not that long ago, if you said artificial general intelligence, or AGI, was just 10 years away, people would have called you a crazy optimist. But today, that same 10-year timeline is now considered the skeptical take among many people leading the charge. That's how fast the goalposts are moving. So that leaves us here. The pace of this change is just off the charts, faster than even the experts thought possible. So maybe the question isn't really, are we in a bubble? Maybe the real question is, what happens when today's wild speculation becomes tomorrow's reality? What comes next? Thanks for tuning into this explainer.